Hello and welcome back to Global Value. In today's video, we are going to be performing a fundamental stock analysis of Bayer, ticker symbol BAYRY. The ticker we're using today is Bayer's ADR, which is not their primary listing. The company is primarily listed in Germany. Bayer is a pharmaceutical and life science business that famously created the drug aspirin. In recent years, Bayer has been in the news because they have had a number of Roundup-related lawsuits that have really come down hard on the company. So Bayer acquired the Roundup brand as part of its $63 billion purchase of Monsanto Company in 2018. Roundup is a pesticide that uses an active ingredient called glyphosate, and Roundup's use in glyphosate have been at the center of a number of lawsuits, primarily from consumers who used it and are trying to argue in court that it caused cancers. Recently, the U.S. Supreme Court rejected 2 different jury verdicts that would have given over $100 million to the plaintiffs. Bayer had tried to settle these nearly 100,000 lawsuits in 2020 for $10 billion plus $2 billion to block future claims. However, courts did not approve that. So even despite that, Bayer has now had favorable rulings in 5 consecutive trials, and the initial multi-million-dollar verdicts were only for individual plaintiffs. They have not yet had to pay out any money for groups of plaintiffs, so that could potentially bode well for the company. So despite those lawsuit concerns, Bayer is still a very large and established company, and right now it's actually close to the Joel Greenblatt magic formula criteria. So we're going to investigate the company's fundamentals today and see whether this business is able to rise above their potential lawsuit concerns. Currently, their US listed shares are trading for $12.09 per share. Over the past year, they're down 11%. Going back 5 years, the company is down 60%. Over 10 years, the company is down 40%, which is 5% compounded annually. And going back prior to the global financial crisis, however, the company's share price is up at a rate of about 3% compounded annually. In addition to that, they're also paying out about a 2.9% dividend yield. So that dividend yield would be in addition to that share price appreciation. So the company is just 9 cents above their 52-week low, which is down more than $6 or 33% from their 52-week high. They are a large business. They have a market cap of 49 billion euros, which because of the parity between the US dollar and the euros right now, so their US denominated market cap is about $48.5 billion. So for some more background about the business, Bayer is a pharmaceutical and life science company that is a German healthcare and agricultural conglomerate. Healthcare products provide close to half of the company's sales and include pharmaceutical drugs as well as vitamins. The firm has a crop science business that includes seeds, pesticides, herbicides, and fungicides, and which it was expanded through the acquisition of Monsanto in 2018. Bayer was founded in 1863 and is headquartered in Leverkusen, Germany. So for our fundamental analysis today, we are going to be performing the Select 6 analysis, taking a checklist-style approach of 6 standard financial metrics to come to a holistic and beginning understanding of Bayer based off of their business fundamentals. So this analysis is still a work in progress, and it's an opportunity to learn in public. It will continue to improve and get better over time. So with that said, and that background about the business, let's get right into our analysis. Starting off here with metric number 1, we want their average return on capital over the last 5 years to be above 14%. So the average publicly listed business earns about a 7% return on capital, and over the long run, over the course of decades, a stock is going to return approximately what its underlying business returns, and these underlying business returns are captured here by return on capital. So in the last 5 years, Bayer has seen ebbs and flows in their return on capital. It went down following their Monsanto acquisition and averaged out they're earning just under 9% returns on capital. In their last 12 months, they're only earning about 6% returns on capital. So that's even lower than that average. Either way, it's below that 14% metric we're looking for, and this is going to be an X to start off here on metric number 1. Metric number 2, here we're looking for revenue, net income, and free cash flow growth over the last 5 years. This metric is all or nothing in nature. Either all 3 of these are going to be up for a check, or if even one of them is down, this entire metric will be an X. So Bayer has been able to grow their revenues slightly. However, their earnings are quite a bit down, and their free cash flows have been cut by over 2/3. So this is an X here on metric number 2. Even though their revenues are up, the business is not able to translate this into being a more profitable business overall. So far we're 0 for 2 to start things off. Metric number 3, here we're looking for earnings per share growth over the last 5 years. So Bayer has both seen their earnings decrease and they've also diluted existing shareholders over this time frame. Here, taking a look at the business on a per share basis from the perspective of an individual shareholder, this is also going to be an X on metric number 3. Metric number 4 is going to be similar. Here we're looking for free cash flow per share growth in this time frame. Again, their free cash flows have fallen by quite a bit, similar to their earnings. This is yet another X here on metric number 4. So far, things are not starting off so hot for Bayer. We are 0 for 4 through 4 metrics. Next up, for metric number 5, we want their net debt, which is long and short-term liabilities minus cash and short-term investments, to be below the amount of free cash flow that the business has generated over the past 5 years. At the end of last year, Bayer had $37 billion in net debt. Currently, they have about $38 billion in net debt, and over the last 5 years, they've only generated $25 billion of free cash flow. So this is going to be an X on metric number 5. The business took on significant amounts of debt in 2018 to fund their Monsanto acquisition, and the associated lawsuits that have come with that related to Roundup have not boded well for the company since then. In part because of that, the business has not been as free cash flow generative as they may have expected. And so right now, it looks like, based on the business's debt load, that they are overly levered. This is concerning to see because during economic downturns, it's these overly levered businesses like Bayer is here that are at the greatest risk of performing quite poorly, based on the fact that they're in a precarious and potentially weak financial position, and that if they needed to raise capital in a hurry, they'd most likely be doing so at disadvantageous terms. So not good to see here at all. Through 5 metrics, we are 0 for 5. Finally, the big metric of them all, metric number 6, we want their average free cash flow to total enterprise value yield to be above 5%. So if this is the case, this will give us a slight risk premium to the risk-free rate of the 10-year treasury and potentially give us a reason to be interested in the business. So we're using total enterprise value here because it is more reflective of economic reality than market cap is alone. So total enterprise value incorporates both the business's market cap and their net debt position. So it would be closer to as if Bayer were a private business. Currently, Bayer's total enterprise value is $82.7 billion, so $82.7 billion. We learned that in the past 5 years, Bayer has produced about $25 billion of free cash flow, which means that in an average year, they're producing about $5 billion of free cash flow. So when we divide their $5 billion of average free cash flow by their $82.7 billion total enterprise value, we are actually going to get an average free cash flow to enterprise value yield of just about 6%. So this is actually going to be a check here on metric number 6. So even though the business looks highly levered and they have these potential litigation concerns concerning Roundup, it looks like the market is not giving a lot of value at all to its abilities to produce free cash flows. So even with those concerns, not a lot of value is being given to the overall base of the company as a whole. So that's why we're able to see this high free cash flow yield here. So this type of analysis is not financial advice. It is not a buy or sell recommendation of any security. Before considering any investment decision, please consult with the properly licensed and registered financial and legal professionals. This analysis serves as a beginning and holistic understanding of the business to help you determine whether it's worth your time to dig in and learn more about the company. It looks like not a lot of value is being given to Bayer here by the market outside of their high debt loads and their potential pending litigation, so Bayer may be able to offer some risk premium here. Then finally, here we're taking a look at the business's dividend profile. So currently, Bayer pays out about a 2.9% dividend yield, which is better than that of the S&P 500. So even though they have a relatively high dividend yield, people make mistakes all the time by blindly chasing dividends. Instead, it's important to stop and look whether a business's dividends are well supported by their abilities to produce free cash flows. Bayer, unfortunately, has had to decrease their dividends per share in all 5 of these years, and their cash flows have also fallen over this time frame. While the business is paying out a very significant portion of their cash flows as dividends, they are able to support this dividend payout. However, given the business's high debt loads, it would probably be more prudent, especially as a long-term shareholder of the company, that instead of paying dividends, they would allocate this cash flow toward paying down their debt. So free cash flow is really the lifeblood of any business and can be used to pay dividends, pay down debt, reinvest back in the business, make acquisitions, or buy back shares. So ideally, as a long-term shareholder, and especially at the valuation Bayer is currently, you'd probably be better served if management was focused on paying down debt instead of paying out these dividends. However, it does look like Bayer understands that their dividends are not going to be able to exceed their cash flows per share. So their potential to pay out dividends into the future, and whether this keeps decreasing or whether this stops or stays flat or even increases, is totally going to depend on their cash flows. So in summary, Bayer only checks the box on 1 out of 6 metrics. After starting off 0 for 5, they actually surprised us by having an average free cash flow yield to enterprise value that potentially looks attractive right now compared to the risk-free rate. The business only earns about average returns on capital. While they have seen revenue growth over the last 5 years, their earnings and free cash flows are down. And then relative to their abilities to produce free cash flows, the business looks like it is highly levered. Again, even despite their leverage and the pending potential litigation concerns related to Roundup and Monsanto, it doesn't look like the market is giving much of a valuation to the rest of the business. Then we also found out that the company is paying out the majority of its free cash flows as dividends right now. And if you're a long-term investor in the company, you would probably be better served through a different, more effective capital allocation strategy. So again, this type of analysis is not a buy or sell recommendation of any security. It is not financial advice. And before considering any investment decision, please consult with the properly registered financial professionals. So with that said, that's it for today's fundamental stock analysis of Bayer, which is listed in the United States under ticker symbol BAYRY. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Bayer was a subscriber request, so I'm happy to make an analysis of the company. Thanks for learning about Bayer with me today, and have a great day.